Hello, everybody. Coming to you on this Sunday from the less than sunny Naples, Florida. A little chilly down here. To my friends up north, I do apologize, but 60 degrees for us here in Naples is chilly. One thing I want to talk about before we start to get into the action, the cherry that I wear here is the Tasty Trade cherry. I don't know if you're familiar with their broadcasts that they do Monday through Friday, as well as their brokerage, Tasty Works. They offer some great prices on commissions, as well as a phenomenal platform for option trading. Definitely check them out. If you are an options trader, they do have futures as well on most of the popular products, stock indexes, bonds, soybeans. Very wonderful place. Forex futures, wonderful product to check out. If you already have an account, check those guys out. Tom, Tony, the whole Tasty Trade team are absolutely wonderful with the studies that they offer and the knowledge from traders that were actually engaged in floor trading for really a long time. So these are the kind of guys that you want to pay attention to for this kind of information. I do offer you my knowledge from the markets and kind of an insight into the way that I trade, but they are premium sellers and they do things a little bit differently, and it's never bad to have a different insight into the world of trading. I do think that it's good to have more knowledge. So as we get started here, Sunday night futures are open. S&P futures are off 10 points. Exactly what we want to see. We had a pretty hard boost on Friday, really getting us pretty far away from the ADMA. They did gap this thing down, which for the bearish case I think is terrific, considering the fact that we're starting to get back into that swing high area here of 2677, the high on Friday 2672. So we are starting to get some bearish sentiment coming into this market. And as you know, I have been short via long VIX call options. To be more specific, VIXY, short-term VIX ETF. Wonderful product. Bonds coming back a little bit here. Not really much of a gap up here in bonds, but we did really have some brutal selling running into some problems here at the 20-day moving average. I think the bond trade is going to continue to be synonymous with stocks. If we do see weakness, we're going to see more of a move into bonds, driving down those rates continuously. We need to see crude oil because that's been another pretty correlated asset to the stock market, which is also lower right now. We did see some strength in crude oil coming up into the swing high right here at 53.88 on Friday at the high. We did close slightly lower on crude oil, down about 53.56. That just continues to be almost 100% correlated with the movements in the stock market. Dollar's off slightly, euro's slightly higher. 8 cents on 14.14 right now. 2 is going above the 1 on the euro. We're into the 20-day moving average here on the euro. We'll see if that provides any guidance. I don't believe so. I think a lot of these shorter term moving averages, even coming into the 50-day, are starting to lose their weight as they go sideways. In the euro, what am I expecting this week? Since essentially this is a forecast, I think the euro will likely run into some problems up here around 1446, so we'll call it 1450. This is all dependent on the Fed, because we keep hearing that the Fed wants to slow down on the unwinding of their balance sheet, and it's also going to be synonymous, excuse me if I can talk, here with rates. As they drop, I think that's going to continue to, we're seeing more of that stock market correlation. Gold is another thing we're going to be watching this week because gold really did break out big time. We saw a very strong move on Friday with a lot of weakness in the dollar due to the euro correction. With a candle like that on Friday, I like to see some selling. I mean, that's something that I'm really learning to see here is when we see an extended move here on anything, a very large daily move to see a 50% retracement. So here I am considering potentially a buy in gold, and I'm going to pull up the Fibonacci's because we're looking for 50% retracement. So 50% is 1291, which is totally plausible on 1 day time frame for possibly some long term gold. And that means, that's synonymous with the euro gaining some strength. Same kind of deal in silver. I probably want to check in with silver here. Because technically silver was not a breakout, but gold was. But typically they're highly correlated here. Yeah, 1552 is a 50% retracement if you're buying silver futures or possibly some call options on SLV. Bitcoin, we did not. I posted on Facebook I was looking for a target here in Bitcoin. We did come down and touch it. But unfortunately, they did bid this thing back up further on pretty low volume. So unfortunately, the weekly sequential setup is not going to be true. We are seeing some more weakness here in crypto, which I continue to look for as we proceed to hopefully finally come down out of this, multiple week consolidation area. Natural gas getting absolutely decimated here. We're down about 7.9% off 25 cents. Coming down to support right now 291, which I do not expect to hold. We have a setup trend line down here at 263. I think that's where we're going in natural gas. The only issue I see with that is we are on a 7 on the daily time frame, which I do foresee running us into a little bit of problems from a momentum standpoint. A good target if you want to short natural gas via UNG puts. I would not touch natural gas futures, not with the volatility in this thing. Probably coming back up to the 8 as well as the 20, which are pretty much becoming 1 right now, 314. That's one you have to keep an eye on. I'm not touching natural gas the rest of the year. Soybeans pulling back slightly. We continue to watch the 928 level in soybeans, which I think we could totally break this week on a 6 on the daily time frame. So the most preferable circumstance in soybeans would be a pop above 928, coming into a 9, and then pulling back on the 1 to 4 candle reversal back to 928. So that's what I'm looking for here in soybeans this week. Corn, gap down. We did have a little bit of a flag here in corn, bouncing hard off the 50. We do have a little bit of this two-touch trend line to the downside here that I've been watching. That we're trying to break right now again. We're going to keep watching corn to see if that amounts to anything. We're really only seeing a 7-point pop out of here in corn before we start running into more resistance. One thing corn has going for it is we're just now getting a price flip. So the potential is certainly there. Not taking anything though on corn. Wheat, not really anything I'd like to touch. VIX. Now the VIX, because it's inverse the S&P, creating almost a double bottom setup here as the S&P created that kind of double top. So we're going to keep our eye on that as well. So from that standpoint, stocks are looking slightly bearish. I would throw a small bearish bias on stocks this week, as well as a slight long bias on bonds, as well as a slight uh, bullish bias on the euro, in turn giving us a bearish bias on the dollar in the meantime. Okay. I don't think we're going to go into individual stocks now. This is more of a during the week thing to see actual performance. As we go to positions here, yeah, Lennar did update. As you can see, we did close one on Lennar, continuing to look for weakness in really housing stocks as a whole, as home sales continue to decline. They're 3-year lows, as well as almost ABC kind of deal we have here going in Lennar. TLT is going to follow the bonds. Similarly correlated to the bonds. However, TLT is a little bit more bullish here. We did gap strongly in 20-day moving average, and we gap back to the 80 MA. What I expect tomorrow, if these futures really do continue on the downside, possibly another gap back up to the 20-day, and then we're going to have to reevaluate at the close tomorrow. VIXY, VIXY, we're just going to have to follow the VIX and the S&P because that's 100% correlated. So really, right now, going into Monday, it's really a wait and see. I like the gap down in stock futures. I think that's good for the bearish case. And the small amount of strength coming into the bonds tonight. Crude oil getting weaker, which I think is also good. So really, we're just going to have to watch and wait. And on that note, I think I'm going to call this a short one. I will be back with you likely tomorrow to come back in to see how these stocks end up